you are all in all.
Hello guys, and welcome back. This is the Complete Trader, and starting with this video guys, I'm going to be giving out one free strategy, okay, and it is going to be about what you're seeing right now, the B2S and the S2B pattern. Now you may never heard that before, but you know, I've given hints on this before in some of my videos. B2S, S2B simply stand for the buy to sell and sell to buy. This is exactly how the big traders they trade, okay, the big traders and as well as the liquidity providers. If the big traders want to take positions in the market, it is the pattern, it is this pattern that they will follow. And if the liquidity providers want to book profit, if they want to fill orders, it is as well these patterns that they will follow. But sadly enough, what retail traders have been taught is exactly the opposite of this, and this is why lots of people go into the market and they lose money and they don't know why. Okay, they don't know why. And so the B2S S2B pattern, this video is going to talk about it, and with this video we're going to just introduce the concept, and in subsequent videos I'll be giving you even more and more details so that you'll be able to go into the market and find quality trade setups with this, okay? And I'm going to be giving this out for free, okay? And I want you to stay tuned. And if you've not liked the channel yet, I think it's a good idea for you to do that right now and share this with your friends, okay? And so now in this video we are going to be talking about liquidity pools, manipulation, expansion, okay? This is exactly what makes up the B2S and the S2B pattern. You see, when the big traders want to trade, when the smart money guys, when they want to trade, what happens is this: their orders are very large, okay? Their orders are very large, and so they are not going to they will not be able to trade like the small traders do. So they need the needed liquidity for them to trade. You know, as a trader, if you must buy, you need the needed sell side liquidity, right? So they need a price point where there's enough liquidity or enough counter side liquidity for them to open their trade. So if they want to buy, they need a price point where there's enough counter side liquidity, which is going to be what? Sell side liquidity. So let's put this in diagram. So let's see, for instance, they want to buy, okay? So they want to buy, which means price is going up, right? So for them to buy, right, they need the point where there's going to be enough sell side liquidity. Now, liquidity pools, that's a little bit of idea that a lot of people don't, most people don't pay attention to, but these things are real, okay? And these things they are things that you should factor into your trading. All right, so let's say they want to buy, for instance. They need to go to an area where there's going to be sell side liquidity. And where are those areas? The areas are going to be below old lows, okay? And so everything I say with sell side liquidity here is the same thing with buy side liquidity. You just have to flip it over to get the idea. All right, so if they want to buy, they're going to find areas where there are sell side liquidity, and that's what we're going to be looking at right now. Below the old lows are going to be sell side liquidity. Why? Okay, and this is why. Now, everybody who is buying here, anybody who is buying here, okay, they're going to be putting their stop loss below where? So this is where retail traders are taught to put a stop loss. You know, retail is very, very, very predictable. What we do as retail traders, small traders, is very, very predictable. You don't have unlimited account size, so you don't have the ability to assume unlimited risk. So you're looking for the nearest reference point or reference low to put your stop loss. So when you're buying here, your stop loss comes here, right? Now your stop loss is in the form of sell side liquidity. Why? Because when you buy, you need to sell your position in order to get out of a trade, right? So that's one. So that's one group of sell side liquidity that will be resting below the hold lows. So this is why we really assume that below old lows are going to be sell side liquidity. There's nothing, no other tool, no indicator, nothing out there that will tell you this. All right, so we base our ideas on assumption, but on on intelligent assumption. Okay, so we are looking at what the 99% of traders in the market are taught to do, and so that's what we are looking at. And studying price action, over time has actually proven this to be the case. All right, so first group of sell side liquidity that we have here are the stop losses of traders who are going long here, people who are trusting in this price leg to go higher. So as they are buying here, they're placing their stop loss there. That's the first group of sell side liquidity resting below there. Now, another thing that retail traders are taught to do is that when price is dropping, okay, let's say for instance price drops below that low. Now look at what happens. People are taught to trade the breakout technique as well. Okay, so when price breaks below this low, this is considered to be what? Support. All right, so support broken, and people think that this is going to continue dropping down and lower. Now what happens is that you have a lot of people coming in to now sell. All right, that's another group of sell side liquidity. Okay, so people who are putting the stop loss here and people who are going to be selling below this old low. Okay, when this breaks out, guys, I don't think there's anybody who's confident out there to take a buy trade right like that. Okay, so everybody has been taught, programmed to take sell side trade once they see a breakout like this. So this area becomes the optimum point or price point where the big traders or the smart money are going to be taking positions for a buy trade. Why? Because this is where they have the largest pockets of sell side liquidity that they will need to establish their buy side trade. Okay, I hope that's clear enough, guys. And so the next thing we have is manipulation. Manipulation is simply when they drive price below areas like this, where they know that they want to trigger the expectations of people for sell side trade. So they push price below old lows like that, and then they cause a lot of people to come into the market to sell the market, so that they will have the needed liquidity for them to buy. All right, so that's just manipulation. Manipulation is just pushing price, into areas where they know that they will have the liquidity that they need to establish that trade. So that's why it's called the B2S and the S2B, the buy to sell and the sell to buy. So this is like this. Right here, there's the liquidity, price is up here. So they will sell the price here into the area of liquidity to buy it. So their original intention is actually to buy, but when they find areas of liquidity, they will sell the price to that point, pick up the liquidity, and then they establish the buy side trade, guys. And so after they establish the buy side trade, or as they do that, what you find out is the next one, which is going to be expansion. Price is just going to move up. Okay, so when we look at things in the light of supply and demand, guys, the big orders are what actually cause the imbalance in price move. This is what causes price to move. So the big traders are the guys who trade in large volume. When they buy, it will cause price to go up. Why? Because it will take up all the sell side liquidity, and price will shift and move higher in search of more sell side liquidity. Do you understand? Okay. And same thing happens when they sell. When they sell, it will take up all the buy side liquidity and just push price down. You understand what I'm saying? So yeah, when we look at things in the light of demand and supply, okay, that is what will cause the expansion. When they are establishing their trade down here, it will cause price to expand higher, because there's going to be imbalance between the sell side and the buy side. Okay, so the sell side is obviously going to be very, very inefficient. Okay, and so the buy side is what will rule the day and cause price to move up like this. All right. So let's just go right into let me just show you the pattern. So this is what we're going to be doing in this video. There's not really much. I'm just going to be introducing you to the pattern, but look very carefully, guys. This is what the pattern is. So when we go into the market to trade the pattern, you have very you have the areas where you're looking at. Okay, you have detailed things that you're looking at for you to take your trade. Okay, so this is what it is. You have a low. Okay, so like we said, resting below that low is going to be sell side liquidity. That's what this SSL stands for, sell side liquidity. As market goes up, there are people who will be buying this move, right? As they are buying it, they are putting the stop loss below where? There. Now price, this is where the manipulation happens. They now manipulate the price below this low. Now we don't know whether that is a manipulation, because at times you will have price go below an old low and just continue going down and lower, right? So that happens. Okay, that's like a trend continuation or something. But when this happens, when price goes below this old low and doesn't keep going down, okay, doesn't keep going down, but then rejects from that old low, from below the old low, it rejects and breaks higher like this. Okay, breaking this point where it started moving to the towards the old low. When you have that happen, guys, that is your evidence that, okay, somebody is buying, somebody is taking up the sell side liquidity that's resting below that old low. All right, now think about this with me. Okay, this is very logical. This is very simple. If you have sell side liquidity resting below here, what is the normal thing for price to do? So when price breaks below here, every stop losses resting below that point is in form of sell side liquidity. And also when price breaks below that reference point, which is this low, when price breaks below here, a lot of people are invited, or a lot of people begin to expect that the market is going to go down and lower, and so they begin to open up sell side trade. So every trade that's going to be opening here is going to be what? In the form of sell side trade. Now that should give weight to the price and should cause price to go lower and lower, right? So a lot of sell, when sell is more than the buys, we should expect to see lower prices. But price comes to an area where there's supply but doesn't keep going down and just rejects. That is an information to you guys. That's an information that somebody is using the sell side liquidity to establish a buy side position in the marketplace. Do you understand? Very simple. Same thing goes for the buy to sell pattern. So you see, there's a liquidity pool, buy side liquidity pool, okay, above the old high. Now they buy, then to sell. The buy to take the price into the area of liquidity, because they know that's where they will be able to establish lots and lots of their positions, and then before the remove will happen. Okay, yeah, this is the sell to buy. So the reason for their first action is to find liquidity, and then the next thing that happens is the course. The next thing that happens is the effect of what they've done right here, which is the expansion. So they sold to buy. Do you understand? They sold to buy. All right, so I guess that's very, 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 very simple. Okay, now in subsequent videos, guys, I'm going to be showing you areas where this is where you're going to be finding, using this to pick up high probability trades, guys. So there are a couple of things that I look for in this pattern. Number one, we have a liquidity pool. Number two, price trades higher a little bit, then breaks down the liquidity pool. Now pay attention to this. I'm looking at this leg, this expansion here has to be something that really tells me that it's a big player, it's a big trader that is in this game. All right, this has to be very, very, very volatile leg. It has to move very strongly. Do you understand? So here I need to see or break up this level with an imbalance, this level where the move actually started from. I want to see that level break with an imbalance. I want to see this move really strongly. I want to see this move very strongly. Okay, now what I mean by imbalance is this candle has to be large candles. Okay, and preferably I would like to see a single move like this candle, a single body, a single candle body like this. Take out the high here, as well as this one, a single body taking out the low here. Okay, what low is this? I mean, what high is this and what low is this? This high is where we saw price drop from to take out the sell side liquidity. So that could be the origin of the manipulation move. So like I told you guys, most of the times this is the smart money that does this, and they would most likely come back there to mitigate. They will, just same thing as you have here. This is the low. This is the origin of the price move that went up to take out the buy side liquidity, and this most of the times is an engineered price move. Okay, taking price into the area of liquidity in order to establish a position, and so they're most likely going to come back here to mitigate, because here for them to move price, guys, they have to open counter side position. They have to open a position. All right, so if they want to move price down, they have to open a sell side position. Now when they open a sell side position here, all right, that's not the original intention. All they are trying to do or achieve with that move is to take the sell side liquidity so that they'll be able to establish enough positions. All right, so they push price down here and then take all the sell side liquidity, and then this is the original intention, to cause price to go higher, by the way the price moves. Do you understand? Do you understand, guys? So this is very, very clear, very, very simple. All right, so in subsequent videos I'll be giving you points, areas on your charts, things to look at for where you want to bring this into play, where you want to take this into the chart, into the market, where you want to be looking for these things. Okay, because sometimes they play out everywhere, but it's not all the time that it's going to be of a high probability. And so there are areas where this pattern is high probability and it gives you amazing result. The beautiful thing about this is that your risk is very small when you for your entries, and your stop loss is very your risk is very small and your reward, okay, is very, very high. So I'm going to be giving you exact points, okay, for your entries, and this is what we have right here. You have the RP1 and you have the RP2. So as price breaks out of this area here, this origin of the manipulation, as price breaks through that level which is the origin of the manipulation, with imbalance. So price breaks that level with imbalance higher. Okay, so where are we expecting to enter? Where are we expecting to come into trade in line with the smart money guys? This is what we have here. We have the RP1 and we have the RP2. So what is the RP1? The RP1 is this last up close candle before this down move, because right inside this up close candle, that's when they started selling to push price down, and so we just take that as a zone, okay, where they will be selling to push price to this point. So we expect to see them come back down here to mitigate this losing position. So we expect to see that up. Now when this does not hold like this, when we expect to see that happen, but when that does not happen, the next point we are looking at is right here, okay, and that's going to be your RP2, which is the last down close candle before the old move, all right, that just went higher. Okay, and then you also have here, same thing is going on here. So when they break through the origin of the manipulative leg like this with an imbalance, when they break through this point with imbalance, we expect to see price come back here, and so we want to take a trade there, or we expect to see it come back to the last up close candle before this whole down move. Okay, so those are the two areas, these 2 points, price points, that we are going to be looking to take our trades. Now I'm going to be showing you examples of this all over your charts, so that you see that this is powerful, guys. It works amazingly. Okay, so let me give you some examples, okay, and then we'll wrap this up. In subsequent videos, like I said, I'm going to be showing you the the areas where you're going to be looking for this pattern, and it will give you the highest probability setups that you can ever have. See what I've given you, guys? I've given you a powerful trading system. I've given you a pattern, I've given you entries. And so when you know that this is what you're expecting, where you're expecting the price to bounce off from, you put your stop loss below there, right? If you are expecting the price to bounce off from here, you put your stop loss below there. Do you understand? And so I've given you entry, okay? And so later on we can talk about things like we can talk about things like profit taking. So that should be in subsequent videos. All right, so let me show you just one or two examples and then we'll wrap this up.
Okay, so this will be the first of 3 examples, guys, and this one will be taken from gold, dollar, and this is the 1 hour chart. And here we can see an example of the sell to buy pattern. Okay, so like I told you guys, in subsequent videos I will be pointing out details, the things that I look at for if when finding the high probability buy to sell or sell to buy patterns. Okay, so all I'm just doing here for you guys is in this video actually is for you to be able to recognize it. Okay, so once you recognize what it looks like, once you know what it looks like, then we can talk about the details on picking the high probability patterns or setups. But here we have an example of the sell to buy. We can see market dropping here. We saw this rise and then all this drop down, taking out what? This low. So this point is what? The sell side liquidity. There's going to be sell side liquidity resting here. There are people who are looking to continue this trend. They are here as well, trading. Okay, when they see this move going down, they will be selling into this, and when it breaks out, guys, below this old low, then you're gonna have a lot of people looking to continue the trend, right? And so what happens next? Boom, you see this movement to the upside. This reveals the intention of the guys, of the smart money guys. Okay, so this most of the time is an engineered move. Like you can see here, price went below the old low but didn't stay there. I told you, when you see price dip into an area where there is great sell side liquidity or supply, and then it doesn't continue to go down, then you must understand that someone is actually using those sell side liquidity to establish a buy side trade. And so we saw this happen, and this is their intention. Okay, so this level was broken with this one candle. I call this imbalance. So you see how that was broken out, and then all this, and then retraces right into here. So this is your RP1, right? This candle, this last up close candle before this strong move that took out the low, that becomes your RP1, and that was where market traded into. You could have taken your entry as it traded into that and put your stop loss just below that, and then you expect that to happen. Okay, so let's move to the next one. Okay, here on GBP card H1, that's the 1 hour time frame as well. And here we see the pattern play out. Here we have old low, and you have market trade up a little bit, that breaks down. So people are looking to continue this trend, right, as it's going down, and all of a sudden you see this happen. So price breaks down through this old low where you have a sell side liquidity, and you should expect the market to go down in terms of supply and demand, because right below this old low is going to be lots and lots of supply, and that should cause price to continue to sink and to drop, but that doesn't happen. Okay, we see price reject from below that old low where there's a lot of supply. That gives you an instant confirmation that someone that is really big is actually using those sell side liquidity to establish a buy side position. Well, okay, so price is giving you information. What do you know? What can you make of it, right? So you see price moves up, and what do they come back to? You can see that we didn't break through this high, okay, which is the origin of the manipulative leg into the liquidity pools. Okay, we didn't break too much out of it. Okay, and so but we have this last level to look at for, which is this right here. Okay, you can take it like that. So you can see you have the RP2 price coming back to the RP2. So we couldn't use the RP1 because we didn't see this really strong breakout from that level. But price actually came back to the RP2 and respected that. You see that? You take your trade there, your stop loss goes here. You see, this is very beautiful because the area or your risk is very tiny. So it is very easy for you to get your 1 to 3 risk to reward ratio, your 1 to 5 risk to reward ratio, and sometimes you can hit at 1 to 10, 1 to 20, depending on the market you're looking at and the trend. Okay, and so that's one of the things I'm going to be talking in later videos, because you don't want to trade this just by itself. Okay, there are points, like I said, where it has a very high probability of playing out according to your predictions, and also you want to also try to trade it in line with the trend. But there are times when you may not be trading in line with the trend, but you want to really pay close attention as to where the B2S and the S2B is forming, and all those things we're going to talk about in subsequent videos. This is a very powerful pattern, guys. So this is the pattern number 3, and this is the silver versus dollar chart, 1 hour chart as well. Here we can see the RP1 and the RP2 at work. You can see right here we have this liquidity pool that high, okay, and price goes above that level, then drops. You see this drop right here. Okay, so as market drops, we broke out this low. This was the area where the origin, where the manipulative leg actually originated from. So we broke that level out, and then you can see, yeah. So price first of all came right into there, and you saw the reaction, right? It dropped but couldn't hold. Then it made for the RP2. Come in. So then it made for the RP2. Okay. Let's just put up another one. So it made for the RP2, which is this area right here. So we take that all. So the last up move, or the last up close candle before the down move. Okay. So you can see right there. You see that? You see how it beautifully respected that. So you take your trade here, but you stop above there, and you see how price drops very aggressively, guys. So this is very powerful once you know exactly how to use it. Okay, I'm not trying to say this is 100%, but you know, something that can easily give you a 1 to 5, 1 to 3, and it works about 80% of the time. Man, that is about the best strategy you can ever have in the market. Okay, now if you want to learn more of what we do, guys, you want to get my trainings, but the reason why I'm actually giving this out for free, I'm trying to address the issue that a lot of people have with paying for the training. You know, some people come, even though the price is already heavily discounted, they still are asking for discount, right? And I'm giving this out for free, so that when you use this to trade and you make money with it, you will have enough money to pay for the trading, and then, you know, advance your trading career. Okay, so that's what it is, guys. It is very powerful. I want you to look out for the subsequent videos, guys, because we're gonna be giving out much more detail, so that you'll be able to find the highest probability setups in any market, guys. This works in any market, Okay, all right, guys, so that's it for this package. The B2S, the S2B, they spend money, they buy when they want to sell, and they sell when they want to buy. This is the ultimate trading pattern out there. Okay, so see you in the next video, guys. Cheers and God bless you.